How do you know how much you can pay yourself as a business owner? This might be one of the most important videos you watch this year on how to make sure you're paying yourself appropriately from your business. I'm Dr. Alex Engar, and I want to give you all our secrets on how to know what you can safely take out of your business, what needs to stay in it, and setting a consistent salary for yourself. I'm so excited for this video. So we're going to deal with a couple of really big topics today that sit there swirling around in business owners' heads, making them lose sleep at night, making them feel like they're going crazy, and making them question whether or not being a business owner was the right decision in the first place. So today we're going to look at how to decide what you should keep in the business versus what you can afford to pay yourself while making sure that we're paying things like taxes and preparing for future business growth. Next, I'm going to teach you our wealth waterfall process for making sure that you bucket your money each month and have a very clear way to make sure you're paying yourself, saving for the future, and getting taxes taken care of. And finally, I'll show you how to set a consistent salary for yourself. Wouldn't that be great as a business owner to be able to count on that money coming in every month and guarantee that your business can actually pay it? I'll show you all of that coming up next. All right, so the first step to being able to decide how much you can pay yourself versus what you need to keep in the business comes from a model that I call the priority scale. So I want you to imagine a scale that on one side has your business and on the other side has you. Now, these are the business's financial needs and your financial needs. Now, each of those priorities has some sort of sub-priorities as well. And one of them is paying down debt, and the other is paying reserves and building up reserves in your business. And guess what? You have that same thing on the personal side. It's paying down debt and building up reserves. Before really answering how much you can pay yourself, we need to ask, well, what's the bigger priority for you right now? Is the you side of this scale more important? Maybe you and your personal family are depending on the business to provide for you. Maybe you have a spouse or another source of income and you don't actually need it to make that much for you, and more of the weight gets put over here on the business side. So first we decide what is our bigger priority, and then within that, are we trying to pay down debt or build up reserves? I'll just tell you, if you have no reserves right now personally, or less than 1 to 3 months of a personal emergency fund, then I'm going to really strongly encourage you to have this you side be the priority and making paying yourself the next thing that you do. So now that we've set priorities between the business and you personally, we need to decide how much you have to get paid. We call this the core salary. Here's how we come up with this calculation. So next we need to get a handle on how much you need to get paid each month. If we know that your personal finances are the priority and we need to get some amount of money over to you every single month, we need to figure out how much. I call this the core salary. So here's what we're going to do. You're going to list out every personal expense you have each month and get a total. So I'm talking everything: rent or mortgage, insurance, your car payment, any credit card payments, anything that you have to pay every single month, and then anything extra like groceries or entertainment. I want you to list those out, all those things, and come up with one core salary target. Now, if you have another source of income, maybe you have a spouse's income or you have a job or another business that's bringing you other money, we can subtract that amount from that payment. So let's say I need to bring in, I don't know, for easy math, let's call it $10,000. But then maybe I have a spouse that's working and she's making $6,000 a month. 10 minus 6, right, is going to equal my 4K. $4,000 is my core salary. It is the minimum that I need to bring home from the business in order to not be going negative on the personal finances. That will be the number that we circle for you and start planning around in the business. All right, so now that we know your personal needs, let's go back to your business. So to figure out how much you can afford every single month, first we need to look at your profit and loss statement. So you're going to pull up your P&L and you're going to look at revenue minus expenses equals profit. And you'll look at that net income line there at the bottom. If you have business debt that you are paying back, then we might need to subtract that debt from net income. So let's say we have net income of $10,000 and we've got $1,000 of debt payments in the business. Cool, we'll have 10,000 minus the 1,000 gives us $9,000 to work with. So we take care of debt payments. The next thing we need to save for is taxes. we need to save 30% of your profit for taxes. I'll show you on the board here in a minute with our wealth waterfall system to make this much more visual for you. We make sure to save for taxes, and then we get to look at paying yourself. So let's go to the board and look at this wealth waterfall process that you can follow every single month to make sure you can pay yourself what you need to. And by the way, if you're finding this valuable and you want to see other visual representations of your money in your business, just hit that subscribe button right now because we have so many more of these great trainings coming your way. So I want to show you our wealth waterfall process now that we use with clients every single month to figure out how much they can afford to pay themselves while protecting the rest of the business. So let's go to the board here. First, I want you to imagine that there's revenue coming into your business, right? Sales, okay? All the revenue is coming into your business bucket, and then some money is going out the door as expenses or cost of goods, right? Now we don't have access to that money anymore, and we're just left with this pink stuff down here, the profit. We love profit. But guess what? Not all of that profit is ours to use. And so we have to get disciplined and send it to one of three buckets. The first bucket is going to be taxes. We have entire deep dive trainings on taxes on this channel. You should definitely go check them out. But we want to make sure that we're saving somewhere around 30% of our profit for taxes. After that 30% goes out, then we also want to be saving for future business growth. I recommend 5% of your revenue being set aside every single month into that growth bucket. This might be difficult for a larger business to do. Sometimes we have to start with 1, 2, or 3% depending on your profit margins, but I love 5% as a target. Okay, so 30% of my profit going to taxes, 5% of all my revenue going to business growth, and guess what? I can now pay myself. There's two different models that we're going to use to pay yourself. So let's look at model number one. Let's imagine that you're a business owner who's really struggling financially, or you feel like you don't have an abundance of profit or cash yet. Then I'm going to suggest that you save your tax money, you save your percentage for future business growth, and everything else goes to you as the owner, okay? Remember, with our priority scale here, if you as the business owner have to be the financial priority, then we can just give all of that money up to you after we save for these things. That's option number one. Option number two is you feel like you have abundance in your business. There's plenty of cash at the end of the month and you feel guilty paying yourself that much. Well, then here's what we do. We save our money for taxes. We pay ourselves at least this core salary that we've set as a minimum for ourselves. That way, we can pay that every single month, feel like we're doing just fine personally, and then everything else goes to that growth fund. Now, you might be asking, well, Alex, how do I use that growth fund? I'm so glad you asked. This is exactly why you're here today. That growth fund then gets to be a quarterly slush fund that we distribute out. So here's a couple of things that we do with it. Every quarter, you're going to see how much is in that account, and then we're going to split it. A bunch of it is going to go to you as an owner's bonus, and the rest of it is going to go into your business reserves. Maybe that's a future coaching endeavor that you want to pay for. Maybe it's the next piece of equipment. Maybe it's the next hire. But we use that growth between you and the business, split however you want, according to your priorities scale. So you see how this all ties together now? And we can have a clean system every single month. So now you might be saying, Alex, this is amazing, a little bit overwhelming, but I would really love a tool that can just tell me what to do. Well, I'm so glad that you asked for that, because I have made that for you. And in fact, at the bottom of this video, if you go click the link in the description, I will give you my worksheet for how to do this every single month, okay? It's that wealth waterfall process. We call it our paycheck predictor that tells you, based on your numbers in the business, how much should you be able to pay yourself each month. I want you to go click the link, download that paycheck predictor along with our training that teaches you this stuff in depth to apply to your business this month. Go grab that training and we'll see you on the next video.